What is going on, guys? Good morning. It's your favorite mortgage lender, Abdel Kwame. Got Mortgages actually coming to us live on a Tuesday. So I wasn't able to get our market update out yesterday. We actually had an event out in Asbury Park, which was super, super successful. But want to talk about what happened last week. What do we anticipate? This is a huge week. We're going to get updates on the PCE report, personal consumption expenditure report. We're also going to get a couple different updates. One in regards to mortgage applications and how the mortgage applications have been coming in, appreciation numbers, which we should get momentarily, and then just new home sale data and pending home sale data. Again, with like I said, the big piece of it is going to come on Friday with the PCE report, and I'll actually do a little bit of a deep dive as to what my expectation is before we head into that. But starting off, I'm going to go ahead and share my screen like we usually do and just reiterate again what happened last week. We know that the Federal Reserve went ahead and paused on their interest rate hikes, or I should say, even cuts, right? Once again, keeping interest rates unchanged. A couple things that we saw, we know that they did that. Existing home sales actually jumped up, exceeding expectations, which was great. Home builder confidence drops a little bit, which is not uncommon given the obviously circumstances currently when it comes to the tariffs and things like that, right? But diving in first thing, when we talk about the Federal Reserve holding their rates, they held once again their federal benchmark rate 4.25 to 4.5 once again, right? The last time that they actually did the cut was back in, we saw one in September, November, and December. Kind of really kind of gauge the market and see where GDP and also which is gross domestic product and also inflation is starting to shift. Um, One of the big parts that we did see though is their summary of economic projections, right? Their dot plot. And they basically once again confirmed that they're still factoring in potentially two rate cuts heading into the year. Many professionals do assume that they may potentially see three to four. We'll kind of see how that goes. But again, the projection obviously on the slowdown of GDP is critical. We saw a drop to 1.7%, which was previously down from 2.1%. Like I had mentioned, existing home sales did jump up. We're still seeing homes being sold above list price, to be exact, 21% of them being sold, 31% of first time home buyers, which is a little bit on a decline. Homes, depending on, again, if they are priced right, are flying off the market within days. If they are priced a little aggressively, they're sitting. So we're seeing an average of about 42 days on the market, which was from 41. So not a big change, right? We are seeing an uptick on inventory, like we see here, 1.24 million as of last month, showing about a 3.5 month supply, still consistently showing that inventory remains very, very tight. And we're still starting to see again an increase, though, when it comes to sale pace, 4.2% month over month, and a little bit of a downtick on the year over year. On a national level, median home price 398. That is taking in the average of the highest price sold homes relative to the more affordable homes with the median price involved. Again, kind of showing despite inventory of 1.24 million, we're still starting to see us really kind of staying close to tightness in regards to pre-pandemic numbers. Only 848,000 of that $1.2 million homes are actually active, which again continues to go to show the tightness on supply and demand. Home builder sentiment once again dropping. Again, not uncommon given a little bit of the uncertainty when we talk about tariffs, 50 being the median number of where we want to see, kind of signaling a little bit of a contraction. The bottom line, again, is just the threats of tariffs, high costs, and uncertainty is starting to show a little bit of maybe that stickiness in regards to the builder market. You can kind of see here. One thing that is good to see, though, is we're seeing an 11.2% month over month increase when we talk about home starts. And then we're also seeing an increase of 0.1% month over month on construction. Now, these numbers do change. Again, we are starting to see obviously a disruption kind of coming in from the winter months. So that normally will tend to kind of show a little bit of a shift as we start indicating how construction starts going. One good thing, though, we did see retail sales actually come in at a 0.2%. We were expecting about a 0.6%, which is great, kind of showing a little bit of an exclusion when we talk about consumer spending and where some of the spending is going for, right? Unemployment claims again just increased by 2,000, which is not terrible. Now, an important part, we saw continuing jobless claims jumped up by 33,000, really kind of coming closer to 1.9. So 1.892 million, which is almost a 3-year high when we talk about continuing claims. Again, like I discussed earlier, what we're expecting this week, PCE report is going to be the biggest market mover that we expect to see, along with some data on appreciation, home sales, pending home sales, and GDP. Now, if we kind of take a look at the market since the start of the year, as you could tell, we have been on a consistent downward trend. We went from almost as high as just a hair over 7.2%. We are now kind of a little bit on the downward trend, anywhere from 6.7 to 6.8%, which is great, kind of really signaling a little bit of a shift. Although unemployment numbers came in low, inflation numbers came in low, the important parts that I want us to take a look at is going to be the PCE report coming in again on Friday, like I stated. They're expecting core PCE to come in at 0.3%, and some are even saying zero point 0.4. Why is it so important for us to know this? Because if PCE, which is the personal consumption expenditure report, shows that consumers are still spending a little bit more money, that's not the direction that we want to go in, right? We want inflation to drop, because if inflation drops, Federal Reserve will generally step in and be a little bit more aggressive to cut their federal funds rate, as opposed to them being a little bit more hawkish and cautious when it comes to them keeping things at the status quo like they have been the last few meetings. Again, one thing that we're going to be replacing is the prior months. Remember, it's a 12-month lagged report. And if we look at February 2024, it jumped up only 0.2%. Now we're expecting again to replace at 0.3, like I stated. So it's going to kind of show PCE jumping up from 2.6 to 2.7, kind of factoring in. Remember, shelter is a big component of it, about 18% of the core PCE report. If we look at the expectations, again, February CPI shows what we look at with core. 30% again on the shelter cost, 0.3%, kind of bringing it to that. So again, I do anticipate that the PCE report may come in not as friendly, but we do see it could eventually round up to a 0.196%, really kind of factoring in, remember, the replacement of zero point 0.2, which should allow the market to obviously absorb that relatively well and kind of take it from there. So I will keep you guys updated as we continue starting to see some of the different levels and some of the market expectations as we start taking it from there, and then we'll rock and roll. If you guys have any questions, as always, please make sure you guys share our videos, like, comment, and subscribe, and visit our website, gotmortgages.com. Talk to you guys soon.